Welcome back to the channel, everyone. Today I want to talk about how some large institutions know that the AMC short squeeze is coming, and I want to back up this information with data from the dark pools, short interest data, and more. So stay tuned and let's make some money. But guys, before I get into the video, I want to give a massive shout out to the 693 of you that have got that notification bell dinged, because you're always the first to watch a new video. So please be sure to drop a like down below and subscribe to the channel and ding that notification bell if you haven't already, because that way you won't miss another video just like this one. So, Charles Schwab recently announced that they've adjusted margin requirements on certain securities. They gave a little disclaimer that says, due to recent market activity, we've adjusted margin requirements on certain securities. Please note, neither Charles Schwab nor TD Ameritrade halted clients from buying any stock or selling any stocks they own, and neither firm restricted executing any basic option strategies. However, we've raised margin requirements on the following securities, and we'll keep this list updated with the latest information. Basically, for the AMC stock, they've implemented a 100% margin requirement for long positions and a 200% margin requirement for short positions. For GameStop, 100% margin requirement for long positions and a whopping 300% margin requirement for short positions. So let's break down what that actually means. If we head on over to their margin requirement page, for stocks above $3 per share, the initial requirement is 50% of cost and the maintenance requirement is 30% of the market value. If we head into this little example, for 100 shares at $100 per share, we'll give it a current value of $10,000. The initial 50% means that you can take margin debt of $5,000 and the client's account equity of $5,000 as well, making it $10,000. And the maintenance requirement is for the client's account to stay above $2,000. However, considering they've now restricted to AMC stock long positions to 100%, that means the current market value of $10,000 must be funded solely by the client's account equity of $10,000, and therefore you basically can't margin long positions on AMC. But the really interesting part is that if you wanted to go short on AMC with a current market value of $10,000, you'd need at least $20,000 of cash in your client account. So not only can you not use margin to go short on AMC, but you also need to be able to cover that trade twice before you can even make the trade. This is obviously to reduce risk to Charles Schwab, because when the AMC price stock rockets, they don't want to be left carrying the bag, because people that are currently short AMC don't have enough cash in their account to fund the short position and get margin called. And if Charles Schwab can't margin call them quick enough, Charles Schwab could lose money. And therefore, not only can customers not use margin to go short on AMC, they need to have double the cash in their account to be able to fund that short position, basically just to protect Charles Schwab, because they know that the short squeeze is coming. But how do they know that the short squeeze is coming? Well, if we look at the dark pool data from StockGrid and we look at the net short volume, the net short position, that net short position is now over $30 billion. But not only that, but new shorts entering the market has been decreasing in volume pretty much every single day over the last few weeks. It looks like the shorts are running out of gas to add to the fire. Yes, we saw the short position increase on Friday with a bit more volume than we'd seen previously. But I personally think this is the hedge fund's last ditch attempt to try and short the AMC stock and to try and get the apes to give up. I think they're really running out of fuel to add to the fire, and this is just a last chance, last ditch attempt. If we go over to Ortex, we can obviously see that the estimated short interest increased massively. However, this is more just a calculation effect because the actual exchange reported short interest was higher than expected, and therefore Ortex had to update their numbers. If we look primarily at the shares on loan, there wasn't a significant increase, and this has only been marginally increasing day by day. Obviously, there is still a very high short position that those hedge funds hold, and it isn't decreasing. Therefore, the shorts haven't yet covered, and therefore, the AMC short squeeze hasn't yet even started. I personally don't think that there's much longer to wait until we see the AMC short squeeze and the AMC gamma squeeze start to happen. Obviously, the other day I said that we would potentially retest the top of this wedge and potentially break out and reach new all-time highs. It seems that we've been repelled back downwards and will now test the bottom side of the wedge. Obviously, I assume the AMC apes are going to hold strong and will retest the top side of the wedge, potentially breaking out to new all-time highs over the coming few days and the coming few weeks, eventually by the 8th of July at the latest, because that's the very edge of that wedge or the pendant. Therefore, overall guys, I don't think we have much longer to wait until the gamma squeeze or the short squeeze in AMC actually happens. So be sure to hold into your seatbelts when that rocket takes off. Guys, if you want to pick up some shares in AMC, but you haven't even yet signed up to a trading platform, be sure to sign up using the links down in the description below to get some free shares. You can currently get 2 free shares worth up to $1,850 with Webull at the moment, and a free share worth up to £200 with free trade if you're in the UK or in Europe. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.